Welcome back to Explain the Charts. Today, October 15th, 2024, we're diving deep into the world of XAUUSD, gold versus the US dollar, to see what's driving the price and what the charts are telling us. Let's start by looking at the latest news affecting gold. Gold prices have recently been on a modest climb, hovering near the record high of $2,685.45 per troy ounce reached in September. This upward momentum can be attributed to a risk-averse sentiment in the market and a weakening US dollar. However, the gold market is facing headwinds from growing concerns about the Chinese economy, which is showing signs of an economic downturn. This could potentially dampen gold's recovery momentum. Adding to the complexity, geopolitical tensions between Israel and Iran appear to be easing, which could also affect gold prices. Traders are keeping a close eye on speeches from Fed policymakers and the release of U.S. retail sales data on Thursday for additional trading cues. These events are likely to influence gold's price action in the short term, but what do the charts have to say? Now, let's take a look at the XAUUSD daily chart, zooming in on the past few months to get a clearer picture. The daily chart shows a strong upward trend, with gold prices making higher highs and higher lows. This suggests that bullish sentiment remains dominant, and the market is likely looking to continue its recent climb towards new highs. We can see several support levels that have held during recent dips. The most notable is around $2,635, which has provided support multiple times. If gold were to break below this level, it could indicate a potential reversal of the upward trend and lead to a correction. On the flip side, if gold manages to break above its recent high of around $2,667, it could confirm the bullish sentiment and potentially reach new all-time highs. It's important to note that gold is a safe haven asset, a hedge against inflation and a depreciating currency. This makes gold attractive to investors during periods of economic uncertainty or geopolitical instability. Therefore, we can expect gold to react strongly to any news events that might affect risk appetite and the US dollar. Let's switch gears to the 1-hour chart, narrowing our focus to the past 3 days to examine intraday price action. The 1-hour chart reveals a more volatile market with frequent price swings and fluctuations. Here, we see a range-bound consolidation between $2,650 and $2,667. This consolidation period suggests a lack of clear direction and might be due to traders waiting for further news or economic data to confirm their trading positions. We can see that gold has struggled to break out of this range, indicating a degree of hesitation in the market. This hesitation could be attributed to the conflicting news surrounding the Chinese economy and easing geopolitical tensions. Traders are likely to watch for a decisive break out of this range, either to the upside or downside. A strong breakout above $2,667 would suggest a continuation of the bullish trend, while a break below $2,650 could lead to a pullback. However, it's important to keep in mind that the daily chart suggests an overall bullish sentiment, so any potential pullback is likely to be temporary. To get an even closer look at the market's current behavior, let's examine the 15-minute chart. The 15-minute chart shows us the very short-term price action, which can be helpful for understanding the current sentiment and potential trading opportunities. If we look at the past 15 minutes, we see a choppy trading session, with prices moving back and forth within a narrow range. This indicates a lack of clear direction, and traders are likely waiting for a catalyst to spark a move in either direction. We can see that the price has found support at the $2,646 level, but it's important to note that the overall market sentiment remains bullish. However, if the price were to break below this level, it could indicate a potential pullback in the market. On the other hand, a decisive break above the $2,650 level could indicate a strong bullish momentum, potentially leading to further price gains. Overall, the 15-minute chart reflects the hesitation and uncertainty in the market, with traders likely watching for a catalyst to push prices in either direction.